Good day, all. Ira Epstein of Linn & Associates with your metals market update, and this update is for Wednesday, the 27th of February, 2019, just getting onto the 250 time frame. Now, let me tell you, today was a day where, I don't know if you heard the bubble pop, but Robert Lighthizer did a good job with that, and it's one of the reasons the stock market's having trouble. The market is stalling because he's playing hawk with how the Chinese talks are going. Then I am very confused by what Fed Chair Powell said today. What he said was they have a plan for the budget sheet roll-off. You know, we have the Fed has a balance sheet of about $4 trillion. A lot of common thought is it's going to be hard to get it under $3 trillion. It's still a runoff to get it down there. A runoff means they're not putting money into the economy. It creates for higher interest rates. So I'm looking today at bonds and notes both dropping, which goes with that. Yesterday it was the opposite. You're getting whipsaws in here. Now I've got the Marches here for the quotes, but I'm moving the futures already on the charts, and you'll see that in my financial report to the Junes. But what about the metals? Well, higher interest rates in the U.S., and you just saw that creates a higher dollar. That took some of the out of the metal markets today. So as we look at the gold for the week, it's not down much. It's down $7, but it's a down week so far. We have 2 more days to go. Remember that. On the chart, you see how the market has been coming down here, and it's starting to break out to the downside. Now, so far, we have support back here in the low 1300 area, resistance up at what we'll call a price count, because it got there. We were all looking in the office at it in that 1350 area. So this market got as high as it had to off the formations that formed way back when. I've just got to tell you, that's still what I see. In order to negate the downtrend, you'd have to get back over 1335.60, but that would not start an uptrend because you'd still have the lower low and at that point a higher high. So at this point at least, you've got the lower highs, lower lows, that's bearish. The market closed under the 18-day average of closes, 1323.20, I think it did. That would give it a downside bias and put into play the potential for that 1303 area should the market want to get down there. Can it play more at the 1323 zone? Of course it could, but momentum is going against it. Momentum is down, bias is down, trend is down. This market has entered a down phase. Going with it, close to it, not quite there yet, is the popular ETF GLD. You've had the lower highs, now you got down, you can see this is yesterday, now you get down to that 18-day average of closes where I call it the line in the sand, the market stalled out. Momentum, however, is still down. If the market closes under 124.62, it would give the bias down. We're now seeing more of a trading top form in the market than anything else. In GDX, lower highs, lower lows. But what's the one thing you're seeing? You're seeing that these challenges of the upper Bollinger Band, that's really stopped the market, even the secondary challenge, and it stopped it there. If I come back here, it's the same type of play. If I go to the gold market itself, you went up here, and that area stopped the market. You had 3 days of play there, and you've broken down since then. So these markets have had a real problem in the gold complex. The gold-silver ratio, I've moved to the May silver. So now this is using April gold, May silver. And you can see that you've got silver. You need more ounces of silver to buy an ounce of gold. That's typically not how this market moves in bull markets. And if you go to the silver, you see lower highs, lower lows, under the 18-day average, momentum down, bias down. This market could be targeting the 1661 area. You'd have to take out today's high to negate the downtrend. It's also an outside day down, so it's adding more power to itself. If today's high were taken out, I'd call that a bear trap if it happened on Thursday or Friday, and if that occurred, you might put into play and catch these people right here short, driving the market back to wherever that upper Bollinger Band is. The copper market stays strong. It's betting on China. That's what this play is all about. I was concerned when I heard Robert Lighthizer talking about it because he seems to be focusing on the fact of enforcement action and that there's no deal that's a good deal with China if you don't have enforcement policies that can actually be what? I'll use that word. enforced, and that's a problem. But the market acting good. You had an outside day up. A problem for the bulls would be taking out today's low. That would be a bull trap because you had an outside day down, and that could call into play price making a run back down to the 18-day average of closes. The strongest of the metals today, to my surprise, was the platinum market. It really has just picked up and run against this upper Bollinger Band. The palladium on the roll from the March into the June has put some pressure. I think you were getting out of the long marches, and now you see the selling coming into this market as they unwound the spreads. You still have the embedded reading, so I still feel the market is okay. And the gold, silver, and the dollar index maintains its downtrend, but it hit an objective yesterday, and it's proving it just doesn't seem to want to get down to that lower band. It might be on its way back up to the 18-day average to find, number one, some resistance, number two, get away from an oversold condition. So that's pretty much how I'm reading that. You know, the one thing that I like to do in the morning is, if you're like me, I can tell you what I do. If you're at all like me at nighttime, I'm reading, and I get certain market letters, get it in the morning. I'm reading to see, did they see something I didn't see? Did they pick up on something I didn't know about? Some are technical letters. I certainly look at seasonals, and then I look at what I'll call my other key letters that I've gotten used to. I don't know pros that don't get other advisory services. I'm sure they're out there, but just about everyone does it. So with that in mind, I created one for you that's very affordable, and it's a technically based one. My charts will look like this, and I cover all those different markets. In other words, all the sectors. But what I'm able to do, I throw specific trade ideas out at you. I can't do that here. I can talk the generalities of the market. I can talk based on what a trend is, what the market might be doing. Here, I'm able to get really specific. Buy at this number, sell at this number. Here's your stop. Here's your objective. Here's a strategy play for you. And I cover all the futures markets in it. I'm able to talk technicals, fundamentals, what I think the pros are doing. And yeah, I know the pros. I go down to the floor. I talk to people, or they're calling me during the day. Different people talk all the time about markets. And that's what we do. You don't get to do that. You get to see what I'm doing from it. And then about every 2 weeks, I also have, for my subscribers, they're able to come into a webinar. And in that webinar, they get to ask the questions of me. Now, going along with this, I'm deciding to write special reports, and they'll come out as videos as well. Enough with the writing. I think it's so much easier to do a lot of this. And you watch a video, you're able to stop it, go back, look at the chart. Why not put it together? I know this is all expensive, 26 cents a day. It's going to break the bank. $7.95 for the first 30 days, and yes, you can even subscribe for 1 year at a time for $156. I think you'll find it well worth your time, and maybe, just maybe, you have a question there, and it gets itself answered by taking a look at this. What do you have to lose? Call us, go to our website, www.iraepstein.com, under Education or Research, click on. You'll then see the drop-down menu that says Morning Subscriber Video. Take it from there. You don't need a coupon or anything. Get yourself started. I'm Ira Epstein.